Scott Mason, welcome to TradeAlyticsLive.com on August 31st, 2012, the Friday before Labor Day weekend. Okay, so here's what we're going to talk about today. We're going to talk about the SPY, a couple code reds that we put out, and what this market could potentially do going into next week. So Bernanke came out and said they're going to announce QE3 when they feel like it's necessary to add more stimulus and growth into the economy. You can kind of interpret that in two ways. The market sold off very quickly. Let's look at a 5-minute chart. As soon as he set it right out of Jackson Hole, the market just tanked. Within 5 minutes, you could see this big long sell-off right here. Came right down to support, almost to the penny at 140.37. Bounced right back. And now what we have is some indecisiveness in the market. It's kind of flagging, which is bullish on an intraday prospect, but if we break down from the 140-145, then chances are that we kind of close today going into a doji weekend. It'd be like a doji close, pairing off half the gains that we have in the market right now. So two things to consider here. Possibly going long the market above 141.61 and then adding more above this area on a daily time frame, 142.25. That's the key area that we need to close above, is the 142.25. This one right here, 142.25 to 142.50. And if we close above there and we keep going, then we could have a multi-day rally up to right around 150 to 151, which would be that exhaustion top, that big blow-off top, an area where you need to get short the market. So it's kind of unpredictable right now until we get that close above 142.25 or we get a close below 140. We're still stuck in that range. I mean, basically we just wiped away all the gains that the losses we had yesterday. We wiped them away with the gains today. So if we close today on a doji, meaning about halfway where we are now, then it's still going to be undirectional going into next week. Have a 3-day weekend. Tuesday's probably going to be some volatility. It's the first of the month. And I think it'll bring a lot more trades and better trading environment for us traders, getting past this weekend. So that's what we're looking forward to. Let's talk about the couple code reds. FFIV is number one. Made some pretty good trades on this one today. It's channeling, as you can see here. Came right down to support at 97. Actually went through 97 all the way down to 95.90. Then bounced right back up. We got long once it got back above 97, which is that floor that you could see right here, and took a trade right into 98, and it got as high as, like right now, it's at 98.74. So, code red alert, buying the stock against 97, taking a trade on the way back up to the upper end of the channel. You could see the target area right here. Upper end of the channel is going to be between 102 and 104, and at this point, you can keep a very tight stop, 96.50, and then raise your stop as the stock goes up. That's the first code red. The next one, we're looking at Oracle. I'm sorry, that's not the right one. AKAM. AKAM needs to be on the radar. It pierced through, this is a bearish rising channel. It pierced through that line when the market sold off, but didn't stay there very long. So it wasn't a high conviction trade. I don't think anybody really got short the stock. However, if it gets back below 37, that'll be a break of this rising channel. You can see the volume coming in below 37, taking a trade down to right around the 35 area. And if the market does sell off, which it could, then the next area of support is going to be closer to 33, and then there's that big gap fill down here. I'm really not sure it's going to actually make it all the way back down to the gap. The reason why it gapped up is because earnings were great, guidance was improving, so that's why it gapped up and then kept going, but it is in the bearish channel. So keep it on the radar below 37, guys, on AKAM. And the next one that we got out was COH. And we did get involved in COH, and you had to be very quick to take profits. And if you didn't take profits, then you took a small loss, because this one got out above 58 right in the first 10 minutes of the bell. Got as high as 58.35. Actually sold half of my position into that move, and then it got back below 58. And I held on to it, actually took a little bit of a loss on the trade, got shaken out around 57.40 is where we kept a stop. So I made 30 cents on 500, I lost 60 cents on 500, so I took about a $150 loss. But still should remain on the radar, because once it does get back above 58, retail has been strong. So if retail is strong, and the entire sector and all the other stocks are moving up with it, there's going to be a point in time where this does get back above 58. So you're going to keep it on the radar for a 58 trade up for the gap fill right around $60.50. At that point, you can keep a stop at 57.40, raising your stop as the stock goes up to book the profits. My name is Scott Mason. Thanks for tuning in to TradeAlyticsLive.com, and enjoy your Labor Day weekend. Have a great day. Thank you.